series, you're in for an equally enriching experience tonight. Whether you're here to learn, grow, network, or aim certification, you're right where you need to be. This isn't just a masterclass. We're setting the tone for something transformational. Before we dive in, I'm just going to go into the chat and I want to see where everybody is joining us from today. Okay. All right. Oh, I see Joy. Hi, Joy. Thank you for joining us from Abuja. Tochiko as well from Abuja. Adeshala from Ogun State. Wow, thank you so much. I think we practically have everybody from across the globe joining us this evening. Thank you so much for joining us. I want to see your excitement. If you're excited about the 8th annual conference, please, I want to put your happiest emojis, your favorite emojis in the chat. I want to see how happy and how light up you are for today's session. Now, here's what you need to know. This masterclass is part of a strategically designed 4-part series leading us into something much bigger and more impactful. From August 28th to 30th August 2025, we'll gather both virtually and on-site in Lagos for the AEHRP Power Play, unlocking talent, innovation, and business value. And trust me, this is more than an event. It is an experience. We've lined up, over 26 industry trailblazers, 7 powerful plenary sessions, 6 technical sessions tailored for today's HR challenge. You don't want to miss this conference. A dynamic career clinic, and of course, an unforgettable gala and award night featuring a max party at the stunning Radisson Blu Ikeja Hotel. Do you have your mask ready? I hope you have your ball gowns or your tuxedos ready for 8th annual conference. Now, 3 days of learning, networking, celebrating excellence, and pushing boundaries in people and business leadership. Registration is still ongoing. If you're on this call, please just look at the chat. The link is already there. Secure your spot today, not tomorrow. Now, secure your spot today. Better still, you can also get your organization, right, to sponsor your attendance. We also welcome corporate sponsorships and brand showcases. Simply type sponsorship in the chat, and our team will reach out with all the support that you need for us to make history together. Before we dive into today's masterclass, let's take a quick moment to reflect on the journey so far. The AEHRP 5th Annual Conference in August 2022 left an undeniable mark. If you were at this conference, just drop your present, in the comments. It could be a love emoji, it could be yes, it could be I was there. Let everybody be jealous of you. Anybody that missed it should be jealous of you, because it was, a range of thought-provoking discussions to powerful connections, and it was a true celebration of excellence in HR. Now, let's revisit some of those unforgettable moments that continue to shape the energy and vision of this community through this highlight video.
The kind of organization that you and I aspire to. Organization decides to correct the salary of an employee based on the current inflationary rate or the current cost of living. And then you also, as an organization, to the finance and also to HR. When we talk about HR, you are a business partner and a true one. You will understand the cost of operations to business nowadays. Let's start with this.
Wow, that was an amazing experience. I'm sure if you missed by now, you're jealous, but there's no need to be jealous, right? Because I believe that you will not miss the 8th annual conference happening in less than, a month from today. So what a moment to be here. Today's masterclass is one that is going to build excitement up until that day, right? I'm going to be continuing the journey, building a credible momentum from our first session in Masterclass 2 in this 4-part series, paving the way to the AEHRP 2025 Annual Conference. Today's session is not just another webinar. It is a high-impact learning experience approved for 3 HRCI recertification units, and our team is one that's going to be more timely or even relevant for today's HR leaders. And it is the practical implications of the new Nigerian tax laws for businesses and organizations, what HR must know and do. Now, let's be real. It is no longer enough to be technically sound. Credibility matters, influence matters, and in rooms where strategic decisions are made, HR must show up informed, confident, and ready to lead. And that is exactly what this session is about, giving you the insights and tools to speak with authority and drive meaningful impact where it counts. And we are so fortunate to have a seasoned expert guiding this conversation, someone whose work continues to elevate the practice of HR. Let's take a moment to hear his profile. Please listen closely, get your notepads ready. This promises to be a session of real value.
Segun Akiyode is a global HR leader with over a decade of global experience across diverse industries, providing strategic total reward advisory to senior leadership. He is skilled in crafting and executing innovative reward strategies that attract, retain, and motivate top talent across global markets. With a background in chemical engineering and a career built around human capital strategy, Segun brings a rare blend of analytical rigor and people-centric insight to the world of HR. His extensive industry background spans fast-moving consumer goods, financial services, healthcare, supply chain and logistics, information technology, oil and gas, and marketing communications. Segun is a born teacher with a passion for knowledge sharing. He is a Udemy instructor with over 20,000 students globally and a YouTube content creator with more than 17,000 subscribers where he shares practical human resources insights. He is deeply committed to personal development and impact, driven by a desire to inspire others and leave a meaningful legacy. His guiding mantra is simple: to die empty, leaving his footprint on the sands of history. He describes himself humbly as a work in progress.
Wow, what an inspiring profile. I'm so inspired. I believe by now all your excitement should be up in the chat. It is clear we're in for a session packed with insights and practical value. Now, it's my pleasure to officially welcome our speaker for this evening, Segun Akiyode. As we begin today's masterclass, don't forget to stay engaged in the chat box. Share your thoughts. Feel free to drop your questions as they come. We'll address them during the Q&A segment. Segun, over to you. Take it away.
Good evening, everyone. If you can hear me, let me know you can hear me. Good evening, everyone. Thank you so much. For a few minutes, I was asking myself the question, sorry, whose profile was that? So, organizers, can you help me give whoever put that together? I'm wondering whose profile was that anyway, if you don't mind me. Okay, thank you so much, Dr. Mike Ugu, Global President, Prince, and every organizers that I've engaged with up to this time. Thank you for the opportunity to be here. I count it as an honor. It's not a privilege. And interestingly, the video you just showed, I think I was seeing myself there. I wonder, who is that? Is that me? That was a couple of years ago in one of the conference. I want to believe we're all ready for the conference this year. And this is just a prelude to the conference. So today we're going to be speaking interestingly, and I'm going to be sharing my screen right away. And we will take questions much later, which means if there are questions that need to be answered, We will be able to pick that towards the latter end of this particular session. So for now, I want you to focus attention on my screen, and I'm going to put it in full slide mode. Please, if you can see my screen, just let me know you can see my screen, such that makes life easy. Awesome. So just indicate if you can see my screen. Let me know that my screen is up about now. And so what are we going to be discussing today? We're going to be discussing practical implication of the new Nigerian tax laws. From a two perspective, we're looking at it on the impact on businesses as well as organizations. Now, this becomes very, very critical. Critical in the sense that we are going to be looking at what this means for organization from the HR perspective. So we're going to be wearing two hats in the course of this session. One, the hat of the business owner, and two, the hat of the strategic business partner itself. And I know a lot of buzz has been happening since this was passed into law in the month of June, 25th of June to be precise. And interestingly, we have time. At the same time, we don't have time. The law was passed on the 26th of June, and there's a 6-month window, which means by the 1st of January 2026, this law is expected to come into effect. And the implication of it coming into effect also comes with some, let me use the word mixed feelings from a standpoint of organization asking themselves the question, what is this going to mean for us? In the sense that how are we as an organization going to be able to cope basically with this new change that is coming around? And in line of that, that's exactly what we're going to be doing in today's session. Why? We're going to be looking at the law. I will try not to be too technical. At the same time, I'm going to be trying to be technical because what we want to do here is giving us about 60-minute run through the key changes that are coming. So what I'm going to be doing in the next couple of slides is I will take you through the key changes, and I will tell you and summarize what HR should start to prepare for. So this is just me giving you 60 minutes to run down through 4 different tax laws with specific interest on what HR must know and what you must do. There are a lot of technicalities. They said the devil is in the details. So after a session like this, the next approach for you is to jot down the key things that you must take that should be front burner. I'm not going to be running through everything because if I do that, then it becomes a legal review. But what I'm going to be highlighting are the key things that we should take note of as HR professionals. And I'll start up by a little bit of a background, which I've already given in itself. So on the 26th of June, a very monumental day, very phenomenal. I'll say it was a big, significant day where President Tinubu signed 4 tax bills into law, and it was culminating about 11 months of work since the president came into power. He mentioned change, and one of such is around the tax bill or the tax act that's now being signed into law. Now, it's a significant major shift moment when it comes to Nigeria's fiscal landscape. So when we're talking about fiscal landscape, we're talking about how does government make money? How do they spend money and the entire effect around government revenue? And how does that also translate to economic value to individuals? This tax law is going to be taking effect on the 1st of January 2026. So it's going to become effective in January. So now we're in July. July is almost over. So technically we have about 5 months to go. And what are the key areas of that tax law. The first one is the Nigerian Tax Act. Now, this particular Nigerian Tax Act is the one that defines HR. If you were to look at out of the four taxes bills that were signed into law, the Nigerian Tax Act is the one that redefines everything you know around payment of employees. So that is the key one. And interestingly, it was during this particular review we found out that currently, before now, Nigeria seems to have about 50 or more taxes, which some of them will look into them and we'll see how all of them are consolidated into one another. Now, the second one is also the Tax Administration Act. Now, this particular one defines the rules of collection. So before now, we know the Federal Inland Revenue, we know the State Internal Revenue Service, and the local government. But now the Tax Administration Act is trying to consolidate everything. Interestingly, the Nigerian Revenue Service Act has now given birth to a new government agency. FIRS is no longer going to be known by January 2026 as FIRS. It will now be called the Nigerian Revenue Service with a new mandate. That mandate is to consolidate every single thing that comes to government as a revenue. So all the agencies of government that tends to get money, or the revenue generating agency, as I call them, of government that tends to stand on their own before now, all those generations will now come through the Nigerian Revenue Service. That is why it now has a new name, and it also has a new focus and a new mandate. So it will no longer be about taxation alone. It will be about the entire revenue service for the government. And an interesting part of that is that tax collection will now be digital. Yes, you heard me right. Yes, you heard me right. Each employee, each organization, as a matter of fact, each individual resident in Nigeria or not resident in Nigeria, but has income from Nigeria, would have a little bit of influence or concern as to this conversation around the digital part around tax collection. Why? Every individual would now be required to have a tax identification ID. Now, that tax identification number will serve as what your BVN does to all your bank accounts. And the whole idea is that the Nigerian Revenue Service is going to be leveraging on singular identifier. What identifies you as an individual in Nigeria today? Your NIN is now tied to your passport, your international passport. NIM is tied to your bank account. BVN is tied to all of the accounts you have that is limited. So what the Nigerian Revenue Service is going to be doing when they come live in January is that there's going to be a digital registration of every individual for the purposes of taxation. The whole idea is that they can be able to pull out your records and know all of the incomes that you're not declaring or not declaring. Imagine your tax ID is tied to your bank account. I don't need to say too much than that. But the interesting thing about it is that this is long overdue. I'll use the word long overdue. Now, this tax act is going to be, let me say, making tax avoidance now become, tax evasion will now be more discouraging. So if we make it voluntary, which means we are now making it more easy for individuals to make a declaration, and that way everybody wants to declare and everybody wants everything to go fine. But if we would leave it the way it is currently, it means a lot of people will be running away from taxation. I'm not the agent of government. I'm just talking about what the tax laws and the aim is for everyone. And also the fourth one is the Joint Revenue Board Act. Now, this is the most interesting part. It brings a twist into it. And that is the coordination of taxation in terms of all the revenue board across, and the introduction of an independent body which we call the tax ombudsman, which will help for tax appeal and tribunals. So if you are not able to pay your tax, The tax ombudsman is almost going to be like a customer service agency that stands as help to provide support in paying your tax. So see it as a new dawn in the history in Nigeria. See it as the beginning of many good things to come. Honestly, my heart is going out to say this works well, because if it does work well, because the question everybody asks is that the agencies of government are getting a lot of money, but it's not going into the same course. It's not going in one direction. So that is giving you all the breakdown of all the various 4 areas as it were. Now, how does this concern me as an HR professional? How does it concern me as a business owner? Let's start to look at some of those conversations. Now, let me start to break it down now. It's a complete overhaul of the entire tax system itself. And I'm going to be picking the key areas. The key areas that is worth mentioning as it stands now. The key areas that will become an action plan when you're leaving this room, whereby you go back to your management and as an HR department, as individual, you now start to have different conversations, completely different conversations entirely on what you need to do on all of these changes. So let me start up by the big elephant in the room. The tax band has changed. Yes. There's a revamp of the personal income tax structure. So the entire structure is changing. Everything that you know as at now is going to be changing come January. And what are the things? So Section 33 gives a full details. So I'll put in some of the sections of the Act there for those of you that want to read more and understand in details. Now, there's a clear progressive tax table with 0 tax threshold on the first 800K. Now, the question everybody asks me is that the first 800K, what do I mean? Okay, now, there are some things that are not changing. The definition of taxable income is not changing. So you know that when you pick your gross salary, you need to bring out what we call the tax-free element out of that before arriving at your taxable income. So once I remove all of the tax elements and the tax relief element, which we'll go through in a minute, then anything that is remaining is what I call my taxable income. Now, arriving at your taxable income, the first 800K of that taxable income is free from taxation. Let me bring it down. Let me assume somebody earning 70K. Somebody earning 70K, which is like the minimum wage in Nigeria, is about 840K. Now, by the time I remove tax relief, what am I talking about? Let's say out of the 840, for example, the first 800, if I assume, which is not usually the case, by the time I factor in pensions and some other element, let's assume that I have 840, just for the sake of illustration, as my taxable income. So of that 840, the first 800 of that is going to be tax-free. Now, what other things changes within this? Now, I'll go further. Now, another thing that changes is this: harmonized eligible deduction. So you remember I mentioned, how do you arrive at your taxable income? The first 800 after you get your taxable income is free. Now, look at this. Your consolidated relief allowance is gone. Yes. So there's an introduction of what we call a rent relief. Now, that is not the only eligible deduction according to Section 30 of the Nigerian Tax Act. There is also your pensions. Pensions is the usual suspect. It's still a tax-free element. I'm talking about the employee pensions. It's still a taxable, tax-free element. That's 8% of your basic housing and transport. Then we also have the National Housing Fund, NHF, which is voluntary for organizations, for private organizations. But if you still pay NHF, so that's also states a tax-free element for you. Then there's also what we call your mortgage interest. Now, your mortgage interest is another interesting one. The mortgage interest has to do with when you have your own home and you're paying interest on that. You've collected a mortgage to set up your own home, to buy your own house, whichever case it is. The interest on that loan is actually eligible deduction. That's the use of the word in the tax. So the use of the word tax relief is being, just not to create a bit of confusion, the use of the word eligible deduction comes into use. Now, the interesting part about it is, how do I differentiate between rent relief and mortgage interest? For you to have rent relief, then you must be paying rent, because the rule says 20% of the rent paid, or 500,000 or 500K, whichever is lower. Now, the implication of that is this: you would be able to claim rent relief if you are paying rent on your accommodation. But in the case where you own your own home, you will not be able to claim rent relief. But peradventure, you have a mortgage, then the interest of your mortgage can become an eligible deduction, which is tax-free. Then there's also your national health insurance. Now, this is the other part that needs clarification. When I say national health insurance, the first thing that comes to everybody's mind is your HMO. Your HMO is a form of health insurance, and there's a registration required with the NHIS. Now, the whole idea is, if you as an employee is paying health insurance for yourself, not the one that is provided by your organization, that can become an eligible deduction. But if your organization is paying that, you can't claim that as an eligible deduction in this context. And there's also the life insurance premium. Life insurance premium means if I purchase premium, a life insurance on myself or that of my spouse, the premium that is being paid as life insurance can be claimed as an eligible deduction. Now, take note of something. The era of blanket claiming of tax eligible deductions is over. The part around burden of proof is now very evident. For any individual to claim tax eligible deduction in terms of rent, then you must provide the evidence of that rent payment. So it's not that I would blanket put, like it used to do in consolidated relief, there's a blanket amount that can be put in there. But this time around, you must be able to show proof that I am paying X amount of rent. And I'll be able to claim 20% of that rent as a relief, or 500K, which means the maximum I can claim for rent relief is 500K. Now, it's another interesting thing that has come into play. Now, let me shock you. Before now, most individuals that we call remote workers will remain in Nigeria, resident in Nigeria, and they continue to get money from abroad. And nobody checks it. Now, this new tax law is bringing every individual that we call remote workers, digital contractors, gig workers, skit makers, or wherever they call them, that make money, resident in Nigeria. So this tax house has made a definition. And that definition is the definition of what we call resident individuals. And let me be clear on this. To include those whose primary home, family, or economic ties are located in Nigeria. Even if they earn abroad, they must pay personal income tax on that income. So take, for example, I'm in Nigeria, I'm resident in Nigeria, I'm a resident individual for the sake of this conversation, but I make money in the US market, or I make money on any other digital platform, as the case may be. Every of those income that come in is now going to be under the scrutiny of the new tax acts. You are expected to declare that as an income, and you're expected to let that pay taxable income on that. That's another interesting change. That how this is going to be tracked is a conversation everybody asks. Yes, we're going to get into that. Why? Because there's going to be clarity. We're getting close. I would say that most of the things in the Tax Act has been signed, but some clarity areas are still unfolding. One is the issue of rent relief. So who claims the rent relief? A spouse. Two of us owns the building, or two of us are paying rent on it. So who claims it in the actual sense? Don't worry. Clarity are going to come up in the days ahead. That is the expectation, that there will be more clarity on them. What other things are changing? Let's take a look. Now, the conversation around benefit in kind. So before now, organization tends to hide under the caveat of non-monetary. Interestingly, BIK tax has always been there. Benefit in kind tax has always been there. There's a 5%. If you're very close to your finance team or your tax guys, they must have told you that there's a 5% that is always been charged for benefit in kind. But most of the time, organizations don't pay it, or because benefit in kind is not usually tracked from payroll. There's no documentation. Everybody can claim it. Even when I'm giving an official car, I should be paying benefit in kind on my official car. If my organization is paying for my accommodation, it should be exposed to benefit in kind. But most of the time, in the current situation, nobody declares. It's not usually being tracked in payroll. The era of not tracking it is over. Why? This new tax act has now made a lot of clarification. And the clarification is this: BIK is now any benefit not paid in cash by the employee, but convertible to money or enjoyed personally by the employee. So if I'm not paying for it, my employer is paying for it, that's a benefit in kind. By virtue of the tax act now, that value must be done at the fair market rate. So if I have a company car, for example, the fair market rate is 10 million, just for the sake of this illustration. Before now, employees don't pay, they don't pay the 10 million. The 10 million doesn't get recorded in payroll. My dear HR professionals, this new tax act wants everything to now be tracked from payroll. The value should be added to the income of the employee because it's an income by virtue of employment, and that will be subjected to taxation for the purposes of payee calculation. How that is going to be done, that's some of the areas of change, because you now need to value it. You now need to find a way to add that back and pay taxation. And you don't need to use the blanket 5% of BIK tax. So organizations before now used to pay that BIK tax for most employees. Usually when an employee is taking the company car home, not parking it in the premises of the organization, it is not a business expense. Most of the time we take it as a business expense, but no. Now in the new tax act, that needs to be taken at the fair market price and added into the payroll for the purposes of payee calculation. So everything you know about benefit as you know it before now is changing by virtue of this tax. So this is the time conversations needs to start going as to what needs to be done or otherwise. Another interesting thing is the fact that I mentioned digital first compliance. Now, with the new tax act, the Nigerian Revenue Service is going to be starting what we call electronic fiscal system, EFS. And that EFS will be deployed by the Nigerian Revenue Service. It's not yet deployed. That's one of the areas I'm talking about, that the Nigerian Revenue Service has the next 6 months to work on how that is going to work. And what does it mean? There is now going to be a mandatory monthly digital payee filing, e-filing, for all employers via the Nigerian Revenue Service platform that is going to be created. That's supported by the Section 28 of the Tax Administration Act. Now, the implication of this is this. Before you pay any employee, there would be a declaration and a visibility to the government to say Shegun is going to be getting 500K as revenue. Out of the 500K, X percentage is taxable income and is going to be paying X percentage as payee. And that will be monthly filed. So the era of the middleman is over. What do I mean? The guy that sit in Federal Inland Revenue or Lagos State Internal Revenue Service. Apologies if you work in that organization. That's not the aim of this, what I just said now. But the conversation means that it's not going to be digital. The middleman is going to be cut off in a way, which means the National Internal Revenue Service, Nigerian Revenue Service, can have visibility electronically as to all tax remittance on a monthly basis. So you don't need to wait till the end of the year to do remittances or to do reconciliation. Now, what does that mean? There is now going to be a very strong responsibility on tax compliance. Audit trail needs to be fine. It means that everything must be digitally filed. So I'm going to get to that conversation around the question anybody starts to ask is, oh, that means my payroll system needs to change. Yes, your payroll system must be able to speak with the system or the platform that is going to be created. So that's already creating an issue already in some people's mind. And even for payroll providers that might be in this room, or anybody relating as an organization, this is the time you need to start speaking to your payroll provider. They must be ready by virtue of an API connection to be able to connect directly to the Nigerian Revenue Service by the time that platform launches in January or wherever when it launches. There's going to be more information on that, but it's going to be digital first compliance on a monthly basis. What are some of the other areas? So I've mentioned some of the areas that speaks to HR. Now, as a business owner, some things are also, now this particular area also speaks to businesses and individuals. We know the concept of capital gains tax. Yes. So if I'm selling my shares or I'm selling my house, anything related to a big amount, capital gains tax for organization, it used to be 10%, but that's moving to 30% now. And that's going to be coinciding with the company income tax bracket. Now, for individuals, capital gains will be taxed at the appropriate tax rate. So before now, anybody that has capital gains tax, a typical example is somebody that is retiring and the organization is paying a gratuity or a severance package to. It's called capital gains tax. Now, in that scenario, there'll be a 10% blanket that will be just spread across and you will pay it. There's a limit of 10 million there. But for the sake of this conversation, that 10% is disappearing for individuals. That capital gains tax is going to be subjected to the progressive tax band, the new tax band. So which means you're going to subject it to which I'm going to show in a few minutes, which is the new taxable. The first 800K is free. If that is the amount, is you subject it and that calculation will come out for you. Now, another interesting conversation is for small organizations. So you notice that there seems to be a favoring of low-income earners in this tax bill. The same way for small, medium enterprise, organizations are as defined by the new tax law as having a turnover that is equal to or less than 100 million. It used to be 25 million before, but they're going to be getting a tax break. Tax break from company income tax break from capital gains tax from another definition or another introduction of what we call developmental levy. I'm going to get to that in a bit. So there's an introduction of a new levy that will be paid and every organization will need to pay it. It's almost going to be a statutory deduction now, but I'm going to get to that in a minute. So if you're a small and medium enterprise owner, you're going to be free from taxation, from company income tax, from capital gains tax, from developmental levy, provided that your revenue as an organization is less than 100 million, about 100 million. And also provided that your fixed asset as an organization does not exceed 250 million. So if you say that your revenue is less than 100 million, but your fixed asset as an organization is more than 250 million, you'll be liable to pay. But those two conditions are critical. That's according to Section 56 of the Nigerian Tax Act. So if those two conditions are fine, then as a small, medium enterprise, it means you're going to get a tax relief if your revenue is less than 100 million. So that's a good one. So for small organizations within the room, it means that you're going to be free from taxation. So that's something that HR professionals in that small and medium enterprise within that threshold. Now, this is the time where HR needs to start asking the employee, their finance team, how much exactly are we making? Because if you don't know what they're making, you don't know whether you're going to be free from paying taxation in that area. So that's also a very critical change that is happening. Now let's get into some of the introduction of the developmental levy. Now, developmental levy, for the sake of this conversation, is that organizations will now be paying 4% of their assessable profits to the government. Now, this is what this is replacing. This is a company income tax related conversation. I know some of us that are familiar with company income tax remittance will be familiar with tertiary education tax, information technology levy, National Agency for Science and Engineering Infrastructure Bill, the Police Trust Fund, all those levies. For companies, they pay taxation. That's almost looking at 1, 2, 3, 4 taxes that company currently pay now. The government is scrapping all of that, introducing a 4% flat on your assessable profits. Now, the whole idea is to replace all of this tax by one called developmental levy. Now, that developmental levy is aimed to help fund infrastructure and development projects across the country, federal level, state level, local government. So it's going to help. Remember when I talked about fiscal change earlier on? That's the whole idea. There is a whole definition of how this is going to be broken down across all the various funds and all the infrastructure. All of that are laid out in the tax law. But the reality here is this. This is going to be a statutory deduction for organizations on an annual level. So if I were you as the HR professional, this is supposed to be taken as your statutory deduction, like your ITF, your pensions, your NHF. That's what it means. It's coming into play. You can't run away from it. So what does it mean? It means you now need to know it. This is the time when you need to be friends with your finance team. This is the time when you need to be fine with your internal auditor or your tax consultant. This is the time when you need to forget all the things you think you know about taxation and go and learn afresh. As a matter of fact, a few weeks ago, I was listening and watching the session that Taiwo Yedele, which is the chairman of the committee that worked on the Tax Act, was doing for ICANN. And he said in that room, and he told the ICANN, everybody in the Lagos State ICANN has said, everything you think you know about taxation, please go and forget it, because we've rewritten everything. And it means you need to learn it afresh. So as HR professional, AEHRP has given us opportunity to relearn, because it means please go back to school and learn everything you need to learn about taxation. Now, taking you through all the boring stuff. The boring stuff, what do I mean boring? Those are the changes. The key changes, about 7 of them that I've gone through that are very critical changes. They're going to be changing the entire landscape. Now, what should HR do? That's the next second part of my conversation today. So what should HR do about it? Now, so what are the key payroll changes and HR implication that we need to start working on now? As a matter of fact, you need to start creating business cases on every of the areas I'm going to be talking about. Why? If you don't create the business cases, January will become a hot zone for you. Why? Because you'll not be ready. But you have between now and the end of the year to create the business cases and now start to pick out those areas and critical areas that you need to take note of within the new law. So let me go through all of the critical areas. Number 1, the payee bands have changed. Yeah, they have changed. So tax band has been updated to account for inflation. That's what they said, actually, but the whole idea is to favor the low income earners. So let's talk about the big elephant in the room. Now let's look at this quick table now. Now, before now, the first 300K of your taxable income is subjected to 7%. But in the new tax table, which is going to take effect from 2026 January, the first 500K of your taxable income will be free from taxation. You will not pay on the taxable income until you cross the threshold of 2.2 million. Now, you will see that in the current regime, the effective tax rate is that every amount of money you are earning that is open to taxation will be taxed. So you can see the first 300 is 7%, the next 300 is 11, the next 500 is 15, and you look at it cumulatively is a lot. But currently we're having between 0 and 25. And for you to be paying 25%, then that means you must be a very, very high income earner or a super high income earner earning 500K more than your salary majorly. But the reality is that now you now have a new tax law. The tax rate have changed. Now, what do you need to do as HR? Number one, this is the time you need to start running your simulations all over again. Because why? The salaries of employees, the take home of employees is going to change from January. There's no way you can do it. There is no magic. I'm sorry, I don't want to be a prophet of doom, but that's the reality. Their salaries, their take home is changing. So if you have been procrastinating, revamping your pay structure, please start now. Why? Anything you do between now and January, between now and December, you can manipulate as much as you want. You can recalculate, run all your simulations on your pay structure. There are employees that have a particular fixed salary or take home that they negotiated. This is the time when you need to start as an organization. You may need to now start to cushion that effect. You need to start updating your payroll template and your payroll system. Yes, I meant it. You need to start running all your user interfaces now. You need to start talking to your payroll provider. Are you guys able to accommodate our new tax law? You need to start running that simulation now. And you need to start asking them, will they be able to integrate with the government portal when the time comes? They need to have the level of flexibility. If you happen, and it now speaks to something. The era of manual payroll might be over. What do I mean? If the government wants to do a digital filing, how that is going to work means that there must be a portal that will speak directly to your payroll system. So what that means is that if you happen to be doing manual payroll, you may need to start to think around what would happen. The details of how that digital filing is going to look like will become visible close to the day. But this is the time when you need to start getting ready. And you need to start communicating with your employees. By the time you run the simulation based on the new tax act, you will know those that will earn more. The low income earners will not be affected because for somebody earning 70K, between 70K and 100K to around 150K, you're not going to pay anything on taxation. The only thing that will be deducted from your salary will now be pension and your NHF. If you are contributing NHF. If you are not contributing, that goes back into the pot. Then the rent relief, which is going to be a relief for employees. But what it means is that their take-home pay will change. So you need to run that simulation and you need to speak to your employees. If you happen to be working in an organization that is union denominated or that has a union, my brother, my sister, you need to start speaking to them because they're going to make a noise. This is the time where organization needs to start asking them the question, can we relieve the burden of the new tax act? You need to run those simulations now. Don't wait till January. Start doing that now. Start speaking now. Start getting ready now. Then documentation. Documentation for audit purposes, now very critical. I mentioned rent relief earlier on. That rent relief is 20% of your rent paid up to a maximum of 500K, whichever is lower. So if 10 million is my own annual rent, 20% of that will bring that down to about 50 to just about 500K. But the reality is that the maximum I can claim, so if my rent is $1 million in a month, 20% of that brings it to 200K. If my rent is about 3 million, then it brings it down to that amount, about 600K. But I cannot claim more than 500K. That's what it means. So the maximum you can claim on rent, if it happens to be more than 500K, what will be given as rent relief will be 500K. So you need to document. It's very critical. So it's not a function of, please give me 500K as my rent relief. No, where is the evidence? The law says now that the tax authorities will ask for the evidence of the rent paid. So that's very critical. So implication for HR, number one, that's it. Number two, clarification on benefits in kind. So there are some things that are exempted from benefit in kind, and I'll talk about them. If your organization is providing meal allowance, or you have a canteen for your employees whereby you are providing food for them, that's free. You don't need to subject that to benefit in kind taxation or declare in payroll. If your organization is providing equipment, what we call work tool, that's not going to be part of benefit in kind. A laptop, a hand drill, or whatever work tool you're being given, or personal protective equipment that you're giving, or uniform you're giving to your employees, you don't need to pay taxation on that. I just got a brilliant idea there, but I'm not going to share the idea so that it doesn't say it's from me anyway. And nobody should ask me in the comment. If you ask me, I'll just tell you I can't remember. Thank you very much. But uniforms are free from taxation. But anything around your housing, if you're providing accommodation for your employees, this will be really might be tilting towards executive compensation, company car, stock options. So for employee stock options, you're giving it to the employee and they're making, or you're paying part of the school fees of the employee or their dependents. Maybe you're doing education allowance, as the case may be, or you're giving them gift cards, whichever one it is. You need to realize that now you need to value them at the fair market value, and it needs to be declared for the purposes of taxation. So this is where the tax law changes the ambiguity. It used to be ambiguous on benefit in kind. It closes that loophole where employers attempt to bypass payee liability by offering non-monetary perks. Those era is over. What do you need to do as HR? You need to review all your tax benefit structure now. Start reviewing them now. You need to document and assign fair market values to non-cash benefits. You need to start the documentation. Why? Because compliance is now going to be stricter. You need to be able to give evidence. I'll use the word of a popular musician. You go explain if you don't have evidence. So you need to have your evidence ready. And this is the time when HR needs to be friends with finance. My use of the word finance here, I'm putting finance, I'm putting tax, I'm putting internal audit, all the so-called of them that are in charge of your money, your treasurer, every one of them, I'm putting them under the same bracket of finance. So when I use the word finance here, I'm talking about the entire conversation. So this is not the time when HR needs to be docile. HR needs to be at the forefront because you need to have visibility over that entire conversation. Before now, organizations usually absorb that cost, but now the new tax act wants you to declare it. You don't need to absorb that cost. You need to declare it. It needs to be valued and it needs to be open for taxation. Very, very critical. 3, the digital economy inclusion. Are you an organization in this room that recruits remote workers? You recruit digital contractors. You work with them, gig workers. This is the time where they are now going to be subjected to payee or withholding tax deduction. Why? Because the conversations around resident individuals have been clarified, and if they are fully working in Nigeria but they earn from abroad, that conversation. So organization that tends to have maybe subsidiaries outside of Nigeria and they're getting paid, they're paying their employees, or you as an individual, what all of those conversations now is open. So this is the time where you need to review contract for your digital and remote workers. If you happen to have them, you need to start reviewing their contract and making it visible for taxation purposes. You need to look at the correct tax deduction, whatever freelance engagement they are doing. Then you need to onboard contractors through verified taxable processes. So the national tax identification number I mentioned earlier on, which every individual in Nigeria is expected to now have, the registration will be out. It's not very critical that everybody now starts to understand how all of that works. Now, what other one? Number 4. Now, number 4 key area is mandatory monthly digital payee filing. I'd mentioned this earlier on. So it means that payee will now need to be filed and remitted electronically on a monthly basis. Now, what is the implication? I mentioned you need to upgrade your payroll system. Upgrade or integrate your digital payroll system with real-time tax deduction and remittance capability. Now, this is the era where every individual must have visibility over what they are remitting as tax. You as the employee and you as the organization and the government must have visibility over them. So gone are the days where tax deduction and everything is a secret business. No, everybody needs to know about it. So you need to train your HR people. HR cannot run away from under and say it is the work of finance. No, everybody must collaborate to get this done. You need to ensure HR staff are trained on digital tax platforms and compliance calendar. There's going to be a lot of compliance conversations that are going to be coming up. So I'll conclude this conversation on digital filing to say tax compliance is now digital, monthly, and detailed. The watchword there is detailed. Yeah, I mentioned evidence. If you don't have evidence, you're going to explain. You're going to explain tire, and I don't want you to do that. HR must lead the payroll transformation, not just for compliance, but to build credibility with staff and regulators. It's now going to be monthly and it needs to be detailed. So you need to understand. So you may now start to talk to payroll providers. They need to start pitching to you to tell you that they can do what they want you to do, because that's the critical part. The payroll providers must be able to deliver. Gone are the days when they cannot deliver. Now there's going to be a lot of visibility on all of them. Number 6 I've even lost count. Now, your developmental levy on accessible profit. Now, where does your work as an HR person comes in? If you're a small organization, medium enterprise, 100 million and below, you don't need to do that. Physical assets less than 250 million. You don't need to get involved in developmental levy. But organizations, for some of us in HR that are working in organizations that are not in that bracket, I will need to pay your 4% developmental levy. Finance will work this out, but this is where you're going to collaborate with finance to assess that what is the cost impact on employment and benefits program. Mind you, before this tax law, this 4% was not a conversation. Organizations will want to find that 4%, and they might start to think that HR is the place to reduce to get the money from. So you need to get your budgeting right. You need to start thinking now. Don't wait till December to do your people budget. Start now. With all of these changes that are happening, start to think around, do you do bonuses? Do you do raises? Your salary increases, your incentive must be accounted for with the additional tax burden. That's now very critical. As an organization, you don't have a choice. You need to start doing all of those budgeting right from now. And also, 2 more points before I start to pick questions is the exemption for small organization. So if you happen to be working in a small organization, this is for you. Now, you need to now ensure that your finance team review your eligibility annually. Remember, this is going to be an annual check. So if this year you didn't go up to 100 million and next year you do, you're going to be eligible, but you need to check those eligibility on a constant basis. And for small organization, the government is giving you a bit of a tax relief, low income earners a bit of a tax relief, so that you can have some flexibility on your staff remuneration. That's the whole idea if you happen to work in a small organization. Yes, the last bit of work is the cross-agency coordination. Now, this is going to become more clearer in the days ahead, but the National Nigerian Revenue Service is going to be taking a lead on everything related to tax administration, while the Joint Revenue Board will be improving enforcement. Now, you should expect more frequent audits. The days of waiting till annual audit is over. Expect frequent audits. They can choose, National Revenue Service can choose to say, we want to come and inspect your payroll system. If it can speak to our system, you're going to be tired of a lot of inspections and audits. Just get ready for it as HR. They will start to ask questions. They might tell you that your system is running Microsoft. No, our own is running Linux. They can come and tell you, sorry, ours is running Apple. maybe yours you do Apple OS. Don't mind me. I'm just saying that just for the sake of understanding. If you're an Apple lover and the government says, sorry, you must run Android, you don't have a choice. You have to run Android. But that's just to drive home the point. Then consistent employee record check. This is a time where you need to keep a consistent employee record across all of the touch points. HR record, payroll record, finance record. Everything must speak to themselves. Why? There's going to be an identifier. So you cannot hide payments under the table anymore. Everything is going to be visible in the new tax regime come January 2026. And at this note, I'm going to take a pause and we have time for questions. And Juliet, this is at the time when I take a pause and whoever you're coordinating the questions, I believe.
Yes. All right. Thank you so much, sir. What an insightful session. Let us light up the chat with appreciation for our phenomenal speaker. Like, that was so packed. I think I was just, taking notes, writing. I didn't even want to stand up because this was packed. I want to see your appreciations in the chat. Please light it up. Thank you so much, sir. So we're going to be diving straight into question and answer. If you have any questions, you can type it in the chat, or you can use the raise your hand feature to speak. But before, while we wait for people to type their questions, I have a question to ask, maybe more than one, but as time permits. I wanted to know, what's your outlook of how Nigerian organizations will adapt? Do you foresee resistance, confusion, or a seamless transition?
Okay. It's okay. I'll say all of the three can happen. One, this is not an optional to do. If you must remain in business, then you need to shape in. So for me, organizations will react differently. Between now and December, there'll be a lot of fights in the boardroom or wherever they are meeting, but they don't have a choice because this is not, the government is not giving us a choice, are they? It's the law. It's signed into law. So organizations will definitely be forced to shape in. It's not going to be a time where you can choose, but it's just a function of they've now defined all of the gray areas and how all of them is going to work. So I'm not expecting organizations to fight. If they fight, it will be at their own detriment.
Okay, thank you so much, sir. So, sir, how about HR managing remote employees that are Nigerians but they live abroad? Are they also affected by these changes?
So the law is talking about resident individuals. So one of the gray areas is how much time they must stay. Currently, there is a rule as to how much time you must stay in the country to be able to pay taxation. And the other caveats to it is if it is coming from if you're, say, for example, you're working more than 60 days within a country, there are tax breaks all over the world, whereby organization tends to give you opportunity to go and work outside of your country of residence, and you will not pay taxation. But usually it doesn't go beyond 20 to 30 days. So if that remote worker is primarily in Nigeria, resident individual in Nigeria, then that person must pay taxation. But at the same time, flipping that script, depending on the contract given to that remote worker, there is a withholding tax element rather than a payee element. So whichever way you flip the scripts, that remote worker will need to be paid. And depending on how it is crafted, whether as an employee or a contractor, there's still going to be a tax element there. So there's no wiggle room per se.
Okay, thank you so much, sir. So if you have any questions, please drop them in the chat. I think I have one in the chat right now from Roslyn. So Roslyn is asking, with this new tax regime, eliminate the arbitrary demands notices and bogus liabilities tax agencies present to organizations?
Hopefully.
Okay.
From a standpoint of the Joint Tax Board and the Nigerian Revenue Service. Now, the whole idea is to create a seamless integration across all revenue services, such that a typical example of an organization sitting in the border of Ogun and Lagos, where both parties are now fighting. So who is the one that will collect the tax? The Tax Administration Act is going to clarify boundaries. It's going to clarify how all the internal revenue services are going to be working, because it's going to be going into one body. You know, before now, internal revenue services collect for their own state. So they are more aggressive for their states. And federal inland revenue doesn't get involved in state work or revenue of taxes in the states. Now, with the Nigerian Revenue Service, their powers are going to be able to move around all the states and clarify. So, because it's going digital, the whole idea is to remove all those ambiguity around liability. Now, the only reason why they can give all of those demand letters is because we as an organization, or you as an organization, do usually declare your payments. There's no way to verify. Some organizations have different payroll. The one they give for tax guys and the one they pay the employees. But the whole idea now is that because it's going through a bank account, everything will be visible. And it's not going to be anything serious. And I think that's the part everybody needs. It's not going to be, people should not start to think that it is doom. No. I think it's a function of transparency. Nigeria, for the first time, will be pushed to be very transparent. And I'll give you an example. I'm currently in the United Kingdom. Before I get paid, the government agency for taxation, if I go on their portal, I can see how much I might be paid or how much my monthly pay, gross salary is going to look like, and how much they are removing as taxation. Why? Because it's digitally done, that before the money hits my account, they already know. That's exactly what Nigeria wants to do. So those aspects of people running, and interestingly, if you're a low-income earner, you're not going to be hit. Maybe some of us are 50 million naira earners here, so maybe that's why we're afraid, or we've been hiding. So this is going to push transparency, honestly. Yes, there will be some elements that will look big. There may be time when you now start to think around other areas to reduce taxation. You might need to go and increase your additional voluntary contribution to pension, because it's still open, is not taxable. So it can reduce your tax liability. It might be time when you need to go and take a life insurance for yourself and declare, because the premium is free. You may need to start thinking around a mortgage now. The premium is free, but the reality is that it will reduce all of those demands, because now everything will be centrally done from the Nigerian Revenue Service, and there can be more collaboration across all the states' revenue services.
Okay, thank you so much, sir. Johnny, you have your hand raised. You can go ahead and ask your question.
Okay, good evening, everyone. Thank you very much, Shegun, for
my hand is up, sir.
Session. I greet you. All right, so coming back home, you have mentioned how transparency is very key. Now, there are scenarios, and I'm sure that many HRO practitioners in some of these multinational, some of these foreign-owned companies, particularly those from Asia, can relate, where they have entity in somewhere in Dubai, right? The salary for their expatriates are paid from the entity in Dubai, whereas the tax element is only deducted from their Naira component, what they pay in Naira here. So if we are talking about transparency and the system, ability of the system to capture that, how will that happen, particularly when the entity, the salary does not even go through any Nigerian bank, it goes to their offshore account from their offshore entity, right? So so how will, I don't know whether they have put in place mechanism for that, but I can say that that is a very common occurrence, particularly in many of these organized companies that are owned by Asians. I don't want to mention a particular country.
You have actually answered the question. So now the question means that because they are expatriate in Nigeria, the one that visibility is on will be the one that is being paid through the Nigerian bank, unfortunately. Because Nigerian Revenue Service will not have, let me say, visibility over the amount paid offshore. But do you know the part that will be coming under scrutiny is the accommodation you give to your expatriates, the car you give to your expatriates, everything you are doing for them, paying in Naira, will now go into that box of taxation. So before now, an expat only pays taxation on their Naira payment alone. But we feed them, we give them food, we pay for their accommodation, we give them car, we pay for their children's school fees even. All of that under benefits in kind will now be open for the purposes of taxation. Then the second side to it is around tax treaties. Now, if Nigeria now starts to sign tax agreements with different countries, they might be able to trace some money that is lost in offshore accounts, maybe at that point. But let's get it right for the Nigerian income first. Then maybe that might be the next area that they might be looking at. Hope that helps.
Very well, sir.
Thank you.
Okay. Thank you so much, sir. I have more questions in the comments. Olaide is asking, what is the implication for Nigerian employees who are seconded to a company outside Nigeria? This is like a 3-year contract. That's the question.
But they are staying in Nigeria. Are they still resident in Nigeria?
Olaide, do you want to clarify your question?
They are not resident in Nigeria, but they are seconded outside. Where is their contract? So you need to, this is where you need to be clear as to the contract needs to be clear. If a Nigerian organization is the one seconding them outside and they are still on your payroll as Nigeria, you need to be able to explain it. So you need to be able to separate where is the contract originating from, who is their primary employer. If their primary employer is a Nigerian organization, you need to explain why they are not paying tax in Nigeria. That's what will likely come. That is what it will likely come to. So I think the critical part is clarifying the legality of their employment contract and defining their residence. So if the contract is not with a Nigerian entity, but they are seconded outside of Nigeria, then that's a clear conversation. You can be able to claim that their employment is not in Nigeria, it's outside. But if they are still seconded to a Nigeria outside of Nigeria, but there's still an element you are paying in Nigeria, this is the time when people need to start changing their residence. So gone are the days where you are staying in Lagos, but you are getting paid in Abuja and you are evading federal inland revenue in Abuja because you are in Lagos. Those days are over. So I think that contract clarity is critical.
Thank you so much, sir. Like, I hope
Yes.
that has clearly answered your question. So I still have more questions in the chat, but I would let we have someone with their hands raised. Mo, you can go ahead and speak.
Thank you, sir. This was very is an eye-opener and is very insightful. My question is around the ability for our existing systems to be able to accommodate the federal government or whatever system they are going to come. You mentioned that it will be the time for HR to stop manual and ensure that whatever software or what we're using. My question around that is, would we now all have to onboard a new software that would integrate, or, normally this is software. One of the reasons or one of the selling points from the manufacturers or the marketers will be, oh, it can integrate. This is an iOS, but we have a way that it can integrate with Android
Windows.
and all that. So because I'm thinking, this will be like a big market for the software sellers. But I'm not seeing the possibility of everyone having to onboard a new or something. Can you just throw more light around that? I don't know if the
Okay.
question is even clear.
Okay, so
But
I'll answer your question in two parts. Number one, because there's not yet a clarity as to how that works, it might be good for you to start sourcing for options now. But one thing that is going to be clear is that the government would let us know which platform the digital filing will be on. And they'll be able to be clear to say if it is going to be a one-time connection to your payroll system or a continuous connection to your payroll system. You would connect to their system every month. So there are different ways you can do digital filing. Digital filing might mean that you would upload every month. That's one way before you pay your salary. Digital filing might mean that you need to have the system that connects to them via an API and it's permanently connected to them. So that clarity will come close to the time, because even in the words of Taiwo Yedele, said there are a lot of work happening at the background that will become clearer close to January. But if there's anything that is clear, is that you might start to think on speaking to your payroll vendor, if you have one currently, to start to put them on notice that X and Y would happen. How prepared are you guys? That's option A. Option 2, option B, start to speak. At the moment, because what the government will release is not yet clear, they will promise you heaven and hell that we can, heaven and whatever, that we can do it. But close to the time it becomes obvious. But make sure that you are speaking to them and they are getting ready. Because by the time the government releases that directive, you will not have a choice but to onboard and to comply. On the manual side of things, there are a lot of other options you might now start to think through. I'm expecting, or I'm envisaging, a lot of payroll solution would blow in the next. It's the same way as the pension remittance filing, digital filing. Very similar. Some platforms is going seamless, some platform is not going seamless. So, but close to the time, we will know what the modalities will be, but definitely you need to start thinking around options. And that is clear. Juliet.
All right. Thank you so much, sir. Thank you.
You're welcome.
All right. Kevin, you can go ahead with your question.
Okay, thank you, Juliet. Good evening, Oga Segun. Well,
Good evening.
Thank you for the clear, insightful session. Okay, so I just have a few questions. Number one is that since the Act is going to throw us into a fully digitalized system, will it also provide distinction or clarity as to revenue sources due to state government and federal government for where there are some complications at the moment? That's number one.
Yeah.
Number two, at the moment, I'm going to ask both as a company representative and also as an employee. At the moment, even with the current system, remitting payee to some state government has been very difficult. Okay. Is only Rivers, Abuja, Lagos, and some few states, that you can easily just anywhere you are, you do your thing. So with that also, with this current NRS also enable states that are currently struggling with digital platforms to also be quick or be up in what they're doing so that wherever anybody is, he can be able to remit. That's number two. Number three is, do you think as well that government has the capacity to monitor compliance? Because this whole thing is going to be really, really bogus. Thank you.
Okay. Okay, I'll start with the first one. Yes, the whole idea is the Nigeria Revenue Service becomes the sole agent of government to collect revenue. So they'll look at it this way. Custom income that used to go to custom will no longer go to custom when the Nigerian Revenue Service come live. Income that comes from, let's say, FAN, for example, might no longer go through them. So all of the agencies of government that tends to make money and they keep the money, the whole idea is that they are consolidating everything into the Nigerian Revenue Service, such that when we are going to be making sharing across states, federal, and local governments, all of the revenue of government is consolidated into one source. So the electronic fiscal system, which is going to be created, is going to monitor all inflows of government, and that makes it easy to push cross-platform. Now, if that also works well, it would solve the problem of states' remittances, because if the electronic fiscal revenue, fiscal EFS, as they call it in the Act, works well, it will mean that when we log into that platform, you'll be able to pick the state you are remitting for. And at the back end, they can sort it out to the states. So it means we would have one source of remittance for everything related to tax, and they can sort it at the back end, such that it makes it seamless. That's the whole big idea. The third question, whether we have the capacity or not the capacity, close to January, we will know. But I can tell you that because the government have signed it, and those that are working with it, they will definitely there will be a lot of recruitment. Let's just be realistic. There's going to be a lot of recruitment that is going to happen between now and January. And knowing fully well that Taiwo Yedele is a trusted person in the tax space, they will put everything behind him. And he's also going to be part of the implementation to a very large extent. So definitely help will come. Yes, there will be teething problem, no doubt. At the start, there will definitely be teething problem, as there are for anything electronic in Nigeria. But let me also give you an interesting example. I had opportunity this is a life example, that things can happen. Nigerians abroad can now renew their passport without leaving their home. And I'm starting to get testimonies of that happening. I mean, they don't need to leave their home. They can renew their passport anywhere they are, and it will be posted to them. That does not used to happen before now. Secondly, what costs to get something from the Nigerian police? I mean, Nigerian police. There's what we call a police character reference. That before now, you need to go and physically go to Panti in Yaba and get it resolved. I did that within a few days from where I was. Payment was done via the police portal, and the document was generated and sent across. That few years ago was not possible. So the capacity is getting better. I'm not an agent of government, strangely, but what I can tell you for free is that we have a lot of brains to get it done. The major challenge is that people usually fight against what is good. If everything works well, we would reap the benefit. That I can tell you. So I hope that answers your third question. Juliet.
So, Adeyemi? Yes. Okay. I was waiting for him to confirm.
All right, Juliet. Yes, I'm here. Shagzy.
Maoga.
Well
My hands
done,
are up.
well
Thank
done.
you, sir.
Good evening. All right, quick one. Two questions for me, two areas that I need us to also have conversation around. Number one is the issue of state of residence in terms of tax remittance. Currently, there are usually the issue of the state of office location, state of residence of employee. which oftentimes, of course, tax are meant to be remitted based on the state of residence of employee and not necessarily where they're located. With the new system, I mean, what are we envisaging that will begin to happen with respect to that? In terms of whether it's still going to be, even at the back end, how do we sort that out? That's one. Number two is the issue of rent relief. Now, unlike consolidated relief, that it is flat, you just put it there. Now, rent relief now requires that it's 20% of your annual rent, which then means that all employees will have to provide their rent agreement, lease agreement, whatever, to their employer. HR, more work to be done to be able to verify that whether fake or original, whichever one is presented by the employee as their receipt of payment of rent. That is one. Then the issue then becomes, how do we then begin? The truth is that your payroll is going to look very interesting in terms of how you're going to compute for different people. Now, the question then again is, I am living with my parents, or I'm still living with my uncle, or I'm living with a friend, or I'm staying somewhere. How do we, it is that I'm not going to be, eligible for rent relief. Because if I'm not able to provide an evidence, or if I provide an evidence that the name on the receipt of the rent is not my name, am I going to provide the name from the person that's actually paying the rent? Then where we are 4 or 5 of us who have started to rent an apartment together and in a joint name or whatever, how do we claim? Or those are these conversations that we need to begin to look at. How do we manage all of these initial things? Thank you.
Yes, so thank you so much. So now for the first question, the second one was very interesting. But the first one, tax remittance is still residence of the employee, not where the organization is domicile. And before now, each of the internal revenue services are on a revenue drive. And that revenue drive is the first person to go and get it. So, but all of that with the joint tax board that is being created, they'll be able to resolve all those tax issues well. And the National Nigeria Revenue Service would make it a bit centralized. And the proof of residence is now going to be more critical. Which means employees, as HR, we need to now start telling our employees to update their residence. Because for some of them, they are in Lagos, but they have their houses in Ogun State, and they choose to still live their residency in Lagos. And a time will come, it creates an exposure if they are reported to Ogun State, and Ogun State comes to ask the organization and give them a tax bill or a fine, as the case may be. So HR might need to come hard on updating records for residency, because that has not changed within the new tax act. Now, the big elephant in the room, rent relief. The answer I will give to you is that we're expecting more details as to who claims what. But what is obvious from now is that you must claim if you are actually paying the rent. And the logical interpretation is that your name will be on the rent paid. The question of spouse or no spouse comes up, which means the landlords also might be a verification medium. And you have said it, whether it is Oluwole or not Oluwole, the evidence must be there. But one thing must be clear about is that the tax authority will now have the ability to challenge the evidence, which is an area of clarity we're expecting close to January. But as it is written in the letter of the act, they can challenge your evidence of rent payment to say whether you cannot claim or you can claim. And to answer your question, HR will need to create a medium of documentation for it. But we can expect that whatever you put once would suffice for 1 year. That's my logic in my head. So anytime we're getting that documentation, anything you are providing must be done once within the financial year. So you cannot present a rent receipt January, and in March, you are presenting another one that your landlord has increased. We know logically that is not possible. there must be a minimum of 6 months before your landlord can increase your rent. And payment of rent is not yet monthly in Nigeria. Maybe when Lagos State passes it in Lagos, maybe. But as it stands today, we know that the minimum rent each employee would typically pay is 1 year. So which means you might be able to create an annual documentation for your rent relief. Once a year, any documentation we use now will suffice for 1 year or wherever time your rent expires. But definitely, yes, HR will need to create a way of keeping that record because it becomes useful for audit purposes. Hope that answers, sir. If I'm living in my friend's house, I may not be able to claim. And if I'm the owner of the house, I may not be able to claim it because I'm not paying rent. If I'm staying with my uncle, if he's in paid employment, will be able to claim, but I may not be able to claim. It's what it is.
Right. Just an addendum to that quickly also. Now, because rent is still paid annually in Nigeria, there will also be the issue of prorated rent in between years. For example, people who pay their rent, maybe the rent is paid in February or in January or in March or, in the course of the year, which means that at what point are they providing the evidence of rent payment?
Yeah.
And there'll be the issue of proration because we'll be paying in the month and be remitting the month and all of those things. So it's a whole lot of gray areas.
Yeah, but yeah, it will be a lot of interesting as to how payroll providers is going to accommodate that. But I would expect that field might be may not be a fixed a fixed field in your payroll system for rent relief. It might be something that is open to changes. And I emphasize that for every person that you change it on, depending on the level of proration that you're applying, you would need to provide as an evidence. So when you are changing the rent relief on your payroll system, I would emphasize that there shall be an icon for an upload of evidence of that rent payment. Because when the digital filing is done, that evidence will need to be checked. It's going to be a lot of interesting days ahead.
Very, very interesting days ahead. Thanks, bro.
You're welcome.
All right. Thank you so much, sir. We still have so many questions loading tonight. Christiana, you can take it away.
Thank you so much, sir. This is fully packed. Now, this is pointing to the key changes that should be made by the HR. Now, my question is, for a HR professional in small business, handling payroll manually, that is using Excel, but remitting pension and tax on digital platforms, and also their annual tax filing with the head of a tax consultant. Does this mean that they have to migrate fully to using software because they've been using Excel and it's been done manually? And also,
your answer is obvious to you, but I'll allow you to answer the second. Let me have the second question.
Okay, so how does the HR now, because she does not have an internal audit or finance department that they actually work together, how do this person determine what they are eligible to pay at the end of the year for the company tax filings and everything?
Okay, but let me ask a follow-up question. Who handles their annual tax returns?
The annual tax returns is being handled by the external tax consultant.
So the organization, you're still going to work with the external tax consultant for all of the things that has to do with the company remittances. So that is going to be obvious. The tax consultant will still have a part to play, but you as the HR must ensure that whatever you are paying is what you should be paying. So you cannot allow the person to take the decision again. The era of the tax consultant say this is what you should do and you do it alone is over. You too must read the law and be sure you are doing the right thing, because there is a penalty for not doing the right thing in the act. So that's the part I must also call out. Now, for the first one that you mentioned, now, Because we don't know which form the digital remittance will be for payee, it might be similar to what pension is currently doing. Because I would emphasize that if pension is already doing digital filing, payee in the first instance might also introduce a digital filing system for us.
Okay.
But the bigger picture is that a time might come that some payroll system can. So there's different ways you can do digital filing. A one-off connection or an API type connection where it's connected to the payroll backend. Every time you need to remit, you don't need to be connecting. It's already connected once. Do you understand? So the form it's going to happen might not be clear now, but definitely there's going to be a digital filing, even if you are doing it manually in the interim. But you are still going to do digital filing. Just prepare your mind for whatever form that digital filing will look like. You need to be ready.
Thank you so much, sir. Thank you so much for this question.
You're welcome. I can see the comment section is buzzing.
It's buzzing. We have a lot of questions tonight. Okay, Ibn Abo, you can ask your question.
Thank you so much. Thank you, Shegun, for that very insightful session. I just want to thank you. I just want to confirm there's some companies that have this element in their payroll called reimbursables, like fuel allowance and some other allowances that are tax-free. So with this new tax law, how would it affect?
Who said they are tax-free?
Well, I just want you to clarify. Yes, please. Thank you.
Okay, so now, when I mention benefit in kind, I clarify that there are a lot of ambiguity. You have just brought one of those ambiguity in. And one of the ambiguity is the fact that organizations usually hide under ambiguity of what constitutes a benefit in kind. And that use of the word reimbursable makes it look as though it is a, take for example, toiletries in an organization can be a reimbursable. So you use your money to buy it, I will pay you back. So that means we are classifying it as a work tool. My honest advice, take it out of your payroll and let it be handled by your finance team as a business expense. Whatever makes you to put it into your payroll element, it is now open to taxation. Forget, before now, you might be able to escape by not calling it reimbursable. But in the new rule, my brother, my sister, please take it out of your payroll. Don't do it as a business expense. That would be my honest advice. Because whatever makes it to show in your payroll, it will be open for taxation purposes. Hope that helps.
Okay. Thank you so much, sir. We still have, so I'm going to be diving into the chat box now. And there are so many questions. So maybe, you can help us, give us just summarized answers so we can take a lot more questions. So I have,
So let me, while you're looking for the question, one just caught my attention in the chat room that is open. Homeowners that want to be paying themselves rent. Now, let me also bring to your attention that this new tax law is also going to be expanding to the informal markets or the informal sector in Nigeria, which means landlords are going to be open to declare their income as well. Because if everybody gets registered for tax purposes, that income becomes open. So you may not be able to be the landlord and pay yourself rent. So just be careful. Because when this thing becomes fully operational, everything coming in will be tracked. I just wanted to give that caveat to that conversation in the chat. Okay, Juliet, over to you.
Yes, thank you so much, sir. So I have a question from I have a question from. Okay, and this question is directed for small businesses and organizations that, startups. And the question says, what advice do you have for small businesses and startup organizations? How can they save costs in terms of this new compliance and strategies?
So that question will, number one is what kind of startup are they? Are they within the small medium enterprise regime, whereby if you're a startup and your revenue, your annual revenue is less than or equal to 100 million, then you are free from taxation, provided your fixed asset is not more than 250 million. So in that scenario, it means you can save up on company income tax. So that's what you're free from. But it doesn't still remove personal income tax that the employee would need to pay. So as a startup, provided you are less than 100 million, then you are free from company income tax, you are free from capital gains tax, and you are free from developmental levy. It's a startup. That's on the company expense side of things. But for employee income tax, you don't have a control over that, because what you are paying your employees, what they would need to pay income tax on. You are just the agent of government that deducts the payee from source. Hope that helps.
Okay, thank you, sir. So I think I have another question, and it's sort of similar. So this one says, what about if the small business does not have a different department for HR and finance? How does HR know what tax the business is eligible to pay?
Who is in charge of finance for the startup? Somebody is in charge. HR is in charge of the payee side of things, but somebody is paying. Somebody is in charge of pay. There will definitely be a finance person. It might not be external. It might be similar to the question that I think Christiana asked, whereby the third party is a tax consultant that helps the organization to handle it. Someone is in charge of the finance of that startup. Find out as HR. This is not the time you need to keep quiet. The fact that you don't know means that you've left it for too long. So if you want to be a strategic business partner, you should know.
Okay, thank you. I have another question from Bukola, and Bukola is asking, what if one has a life insurance but paid for by one spouse? Who gets the relief claim? Both spouses, two policies, or only the spouse who paid the premium?
The rule or the law says life insurance premium for your own self or your spouse. So which means it can happen on both sides. I can claim it, you can claim it as the spouse, provided the person that has the life insurance is tied to either myself or that of my spouse. That's what the definition is. So both parties, except otherwise said no, would be able to claim, because it means it's a life insurance that is for you. So that means I can claim that of my spouse, or my spouse can also claim it. But provided myself or my spouse has a life insurance premium, it is an eligible deduction, which is tax-free.
Thank you so much, sir. Then I have another question from Adeshola. Adeshola is saying, when I heard about this new tax, I reasoned if the majority of staff in an organization is below 2.2 M, and maybe we have just two staff that will be eligible to pay this new tax, won't that raise an eyebrow that the organization is actually paying her staff less? That's her question.
The Tax Act does not say how much you're paying or what you're not paying. It's only more concerned around what you're paying. But you also need to be careful that there's a consistency of your records. So don't choose to doctor your record now when you've presented a different record to the government before now. Just be very careful. Evidence is critical. If they query it and you cannot provide evidence, then it becomes a tax liability issue. That's just the simple response I can give to you right now. Hello,
Thank
Juliet.
you so much, sir.
Okay.
Thank you so much, sir, for the answer. So I have another question that says, for organization with a full-fledged tax team, what's their role in all of this?
They need to interpret. They're a full tax team. They need to interpret. They need to tell the organization what the exposure is. HR needs to give the people budget side of things, and they need to start to run simulation as to what the exposure will look like between now and January. So they need to be able to run audits, what's going to be the new timetable for audit, because I emphasize that since we're going to be doing monthly filing, there might be a new audit timetable, or the frequency of the audit might increase, which means the tax guys should be taking the lead in interpreting every single thing. As a matter of fact, your full tax team should be able to do a session like this in-house as an organization to tell the organization what each of this conversation mean. Now that you've attended a meeting like this, you can go and ask them for clarity that, sorry, rent relief, how is it going to be done? Can you go and ask? Let's go and get all the clarification coming from the National Revenue Service, because there will be more clarification that is going to come up. And your tax guys should be taking the lead on it. Remember, it's going to be a collaboration between HR and finance. And when I use the word HR, finance in this case, tax is inside there, and all of them are in there as well.
Okay, thank you so much, sir. And then somebody else wants a clarification. He said, are you saying we should be posting offer letters on the NRS platform?
Did I say offer letter in any way? Salary. I did not, we don't know what you're going to be posting in the NRS platform as at now. Point of clarity. What I said is clarity as to every income you are paying your employee. So every income that the employee is being paid will need to be declared. But the form of declaration, it's not going to be far away from what we currently do. We currently do tax remittances. It's not going to be far away. And when the audits are happening, you need to provide evidence of what each of them are earning. But the only difference is that we're not going from a paper-based system into a monthly filing system. You know, before now, when we're doing remittances to the Internal Revenue Service, they only do audits annually, but we're expected to remit monthly. But myself and you know that some organization might accumulate maybe 2-3 months before they go and remit. But some organization will do monthly. So the form of remittance might be different, but it doesn't remove the fact that there's going to be remittance. And when the National Revenue Service decides to say what must be uploaded, you must be ready to provide evidence. So if they ask for offer letter, that is what it is. The era of secrecy is over. That's what I'm trying to say. But you must be able to declare how much you are paying that employee, which is what is open to them. And they can ask you for evidence. If you are saying you are paying me 250K, they can ask for evidence of where is the 250K documented? Where's the contract of the employee? They can do spot check. And the burden of proof is critical for you as an organization to prove what you are being paid. So it doesn't mean that you're going to upload, but it might mean that they might ask specific evidence-based questions, which you must be able to defend. Hope that helps.
All right, thank you so much, sir. It has been such an insightful session tonight. I think I have another question, but the person is asking for when the new tax will be effective. Okay, if you didn't join us from the beginning, please, you can catch up on our YouTube channel. The link is already in the comment. Thank you so much. Thank you so much, sir, again, for patiently and thoroughly answering all our questions. And at this time, join me in welcoming our visionary leader, the global president of AEHRP, as he shares a word of admonition with us. Dr. Michael, you can take it away.
Yes, thank you so much, Juliet. P-Shex, good evening, sir.
Man, I greet.
So nice to hear your voice. How are you doing?
Same here. I'm doing good.
Wow, thank you so much. For those of us who might not be aware, Segun is one of the strong members of AEHRP. So Segun, thank you so much. I've gleaned a lot of insights. I have to go back and watch the replay. But I want to commit you. I think we will need to have a more detailed masterclass with you over this tax thing. And for those who might be interested, let me just put that out there. It's not going to be a free masterclass, guys. It's going to be a paid masterclass so that we can give honor to whom honor is due. But I think that to a large extent, Segun has covered all the bases. My major concern will be how can HR practitioners ensure that their businesses key into this? You and I know, Segun, that when it comes to compliance, some MDs are very, very tough to crack, particularly if you're in a one-man business and the MD doesn't give a hoot around compliance. But we just want to, see how we can plan a detailed masterclass, a full day, where we will look at fundamentals of payrolls and then possibly now close with the tax administration, what to look out for, possible scenarios. I know you shared a template with HR practitioners globally when this thing came out. So guys, go to Segun's YouTube channel, go to his LinkedIn handle. If you've not downloaded that template he shared, please go ahead and do so, and all of that. Also, just to put a final word out there, I've been getting messages from members of the leadership team. For those who have either GPHR, PHRI, SPHRI, we are planning an ethics masterclass. So watch out for it. It's going to be a paid masterclass as well, so that you will get your ethics recertification unit. But on behalf of the leadership, Segun, we'd like to say thank you for honoring us. Every time we reach out to you, you don't turn us down. So we appreciate you. You have been a part of this community, and we know that when we call, you will beckon and show how we can move things forward from the comp and bench space. So we'd like to thank you. We sincerely appreciate this time that you've shared with us. And to everyone on the call, please go back and watch the replay. Segun shared a lot of practical insights, what you need to know, what you need to do, the practical application. And for those of us who use HR softwares, let's begin to ensure that those softwares can integrate to the platforms that he has mentioned. So please pay attention to all of these issues. I'm going to call my HR team across my subsidiaries. We will go and listen to this masterclass, because this is a mini masterclass, to be very honest. So guys, let's get ready. And if you are yet to register for the conference, please ensure you do so. If you have not registered, you are wrong. The AEHRP conference is second to none. I can beat my chest. The value of speakers. Segun was one of the key speakers at the 2022 conference and has always been speaking in all our high-level programs. So please ensure you register for the conference, and I look forward to seeing us at the Masked Gala night. So Juliet, over to you as we round up the session.
All right, thank you so much, sir. Thank you. So as our global president has said, please do the needful, right? Register for the conference. It has been such an impactful evening, and we can't thank you enough, Mr. Segun Akiyode. Thank you so much. Let's just take a moment to celebrate him again in the chat. Really, this was a mini masterclass. On behalf of the global president, again, the AEHRP Board of Trustees, Management Committee, Conference Planning Committee, the Learning and Capacity Development Committee, we express our profound gratitude for your time and for your depth of insight that you have shared with us. We hope, as well, as our president has said, next time we call you, you honor us with your presence again. And if tonight's session has moved you, taught you something new, challenge your thinking, please, let Mr. Segun know in the comments before, this session ends. Thank you so much, everyone, for joining us today. And just this is what you need to know that we have ahead. We've got 2 more masterclasses coming up. Be sure to mark your calendar for the next session on August 9, 2025. You do not want to miss it, and be here on time. August 28th and 29th, of course, 2 immersive days of virtual learning to kick off our conference, and August 30th, the grand finale, our signature gala and masquerade party to close it out in a style. I hope you have already started consulting your designers, your tailors, and you've gotten your mask, everything that you need. But of course, before you can even start to do that, please register today, right? Expect global speakers, bold ideas, networking, and of course, game-changing opportunities. Think sponsors, recruiters, exhibitors, all in one place. Register today. The link is in the chat. Invest in yourself, or even in rally your company to back your development. Either way, don't miss it. Thank you for being here tonight. Thank you for growing with us. Thank you for believing in the power of the AEHRP community. Until next time, this is your host, Juliet Kepler, signing out. Good night, everyone. We'll continue.